Today is the 21st of June 2021. My name is David Hickson, and in today's market update I'm going to be taking a look at the S&P 500 and the NASDAQ and discussing what we could expect over the next month or so as markets move into the 18-month cycle trough. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. So here's a chart of the S&P 500. This is the analysis that we have been tracking for many months now. And as you know, of course, we have a 54-month cycle trough that occurred in March of 2020. That was a trough of at least 54-month cycle magnitude. It might have been a trough of 9-year magnitude, as I've mentioned in previous market update videos, but there is still some debate about that. It is nevertheless at least 54 months in magnitude. And of course, now what we are seeing is that the markets are expected to move into an 18-month cycle trough, which we have been expecting for some time to occur in July at some point, perhaps late July. And in today's video, we're going to refine our expectation a little bit as to when that trough is going to occur. So the first thing that I would like to discuss in today's video is the concept of cycle shapes, which I have mentioned in previous market update videos. And previously I discussed the shapes of the 20-week cycles and how we can use cycle shapes to anticipate what we are expecting the market to do. So let's do that again, and I'm going to quickly draw out the cycle shapes of the 20-week cycles, starting from the trough in March of 2020. Now, all of our cycle shapes, as you probably know, describe a capital M shape. That is the shape that cycles tend to create in price movements. And sometimes that M shape gets very strongly stretched in one direction or the other, resulting in a very bullish or a very bearish M shape, but we will always find that M shape in the price movement. So this is the first 20-week cycle over here. It was a very bullish M shape. A bullish cycle shape is one that of course ends the full wave of the cycle much higher than it started, and it is also one in which the peak of the cycle shape occurs very late in the progression of the cycle. That is a bullish cycle shape. That was our first 20-week cycle shape. Our next 20-week cycle shape was something like that over there, which was less bullish. As you can see, the market did not rise nearly as much, and in fact the peak occurred a lot earlier in that cycle. The reason for the lesser bullishness, if you like, of the second cycle shape was because of the fact that the 40-week cycle was of course moving down. We can visualize these cycles as semicircles. Let me quickly display the semicircles, and you can consider the impetus, if you like, of each one of these cycles by taking a look at the direction in which the semicircle line is moving. And so for the 40-week cycle, during this second 20-week cycle, you can see the 40-week cycle was pushing downwards, resulting in a less bullish shape to that 20-week cycle. Our third 20-week cycle was again a very bullish cycle over here, and that was again particularly bullish because of the fact that the 40-week cycle was of course pushing upwards at that time. And so that was our third 20-week cycle. We are now in our fourth 20-week cycle, and the last time that I did this, I used the idea of cycle shapes to project when we might expect a peak. I projected a time in about May for the peak of the 20-week cycle, using the fact that we are expecting this cycle to be the least bullish of all of the previous 20-week cycles. Why is this expected to be the least bullish of all the 20-week cycles? The reason is very simply because of the fact that the 18-month cycle is pressing down to bring price down into the 18-month cycle trough, and the 40-week cycle is also pressing down at this point to bring price into the next 40-week cycle trough, which is of course going to be a synchronous trough with the 18-month cycle trough. And so what happened was the price moved up into that first peak, came down into an 80-day cycle trough over here, and came up and actually formed a slightly higher peak. It's not a much higher peak, but it is a slightly higher peak, demonstrating that the bullishness of this market is still alive and well, and it is now expected to move down into this 18-month cycle trough. As I've mentioned, this particular cycle shape is expected to be the least bullish of all of our previous cycle shapes. Now, considering that the first 20-week cycle was very bullish, it wouldn't be hard to be less bullish than that. Our third 20-week cycle, this one over here, was also very bullish. It's not very hard to be less bullish. So the cycle shape that we are really comparing with is this cycle shape over here, number 2, and I can draw a big block around that. And so we are really expecting this current 20-week cycle shape to be less bullish than this one over here. We do already have a later peak, producing a slightly more bullish cycle than we had in this time period over here from July until the end of October of last year. And so in terms of price coming down into the 18-month cycle trough, we are expecting price to come down to provide us with a cycle shape that is less bullish than that cycle shape that we witnessed from July until October of last year. Let me quickly display the composite model line. The composite model line, I should remind you, is a very useful way of visualizing the results of the analysis. So what the composite model line does is it takes all of the information contained in the analysis, it recombines that information and produces this line. It is not a magical looking into some kind of crystal projection of the future. It is simply a combination of all of the information that we have in our analysis. That is what is presented in the past. And so the orange line, composite model line in the past, could be seen to represent what would have happened if the only thing influencing price during that period of time had been the cycles that we have found in our analysis. That is what would have happened to price. As you can see, there are some discrepancies. There are periods of time where price moves quite a lot further away from that orange line, and there are times where it really tracks it very, very accurately. But that is the result of all of the information in our analysis. We then project that information into the future on the assumption that the cycles keep beating with the same wavelength and amplitude. And as you can see, the composite model line, as I've mentioned in several market update videos, shows that the market is now moving down into an 18-month cycle trough, but it is not expected to be a very strong and big move down. Nevertheless, the composite model line is showing us an interesting piece of information here, which is that as far as the composite model line is concerned, and I should probably zoom in on this little section so that we can see what's happening here. As far as the composite model line is concerned, in other words, the analysis on our chart, the peak for the current 18-month cycle is now in, and price is expected to move down into this 18-month cycle trough, which is expected in about late July. Now, what about this nest of lows? Normally a nest of lows will be very neat. As you can see from this 40-day cycle nest of lows, we have a fairly neat stack of circles and whiskers. The circles are, of course, the exact day on which, or the exact time at which, the next trough of a particular cycle is expected to form. The whiskers are a period of time before and after that exact period of time at which it might be reasonable for that trough to form. And sometimes we get a very neat nest of lows. At other times, the nest of lows is very staggered, as it is at the moment in the S&P 500. Here you can see is where the next 18-month cycle trough is expected, and right over here, in fact, in the past, it was round about the beginning of June, was when the next 40-week cycle trough is expected. Why is that? It's because these circles and whiskers are being calculated on the basis of the recent average wavelength of these cycles. In a bullish market, troughs tend to occur early, and so the cycle troughs that we have managed to identify of the shorter cycles, all of the cycles shorter than the 18-month cycle have, of course, formed troughs since the March 2020 trough. As we have been able to identify those cycle troughs, we have been able to measure their wavelengths, and they have, not surprisingly, come in shorter than the average wavelength, which is usually measured over many, many years. As a result, we get this staggered nest of lows over here. When we see a staggered nest of lows like this, we need to ask ourselves, is it possible that this 18-month cycle trough has actually already formed? Is it possible that this trough in May was that 18-month cycle trough? Because as you can see, the 40-week cycle circle and whiskers actually do encompass that trough over there. And so is it possible that that is the 40-week cycle trough? Before I answer that question, I would like to take a quick look at the NASDAQ, because the analysis has recently been a lot clearer in the NASDAQ, as I have mentioned in previous market update videos. And you can see that we don't have the very staggered nest of lows problem that we had in the S&P 500. We have a much neater nest of lows in the NASDAQ. The chances are that the NASDAQ and the S&P 500, both being closely correlated markets, they are both stock indices from the United States, and because of their close correlation, the chances are that they are going to form the 18-month cycle trough at the same time. And so we can take a look at the NASDAQ and we can bolster our confidence in an analysis on the basis of what we are seeing in the NASDAQ. But let's go back to the S&P 500 and answer that question. Is it possible that the 18-month cycle trough has sneaked up on us and has already formed? Should we already be buying into the S&P 500 on the basis that it is now bouncing out of an 18-month cycle trough? In order to answer that question, I find it very useful to establish what I call my confidence in the analysis. My confidence is, as I've mentioned, definitely at the 18-month level and the 54-month level in terms of this trough over here. So the way that confidence works is that you go down to a shorter and shorter cycle until you can no longer say with absolute confidence that the recent position of a particular trough of that cycle is correct. And so, as I have mentioned already, I do believe that the trough in March of 2020 was of at least 54-month magnitude. So my confidence in this analysis is definitely at the 54-month cycle level. It is also definitely at the 18-month cycle level, because there is no other position round about there that would be a better position for the 18-month cycle trough. So let's work down from there. What about the 40-week cycle? Now, the 40-week cycle has an average length of 272 days. So that would be over here, 272 days. There we go. So I would expect to find the 40-week cycle trough forming round about here towards the end of December 2020. Now, if we look at the price action at round about that time where we were expecting the 40-week cycle trough, there are two possible candidates in my opinion. And again, this could be debated, but that is a possible candidate, and this is a possible candidate over here. There are some analysts that might want to position the 40-week cycle trough at a very subtle trough like that one over there, but I'm not one of those kinds of analysts. And so in my opinion, the 40-week cycle trough is either here or over here. And if we measure the number of bars to each one of those possible trough positions, you will see 221 bars, so about 50 days early for that possible trough position over there, and 315 days to that trough position over there. So that's about 43 days too long. What is our expectation? I've already mentioned in today's video that when a market is bullish, we have a bullish underlying trend and the longer cycles are pushing upwards, we expect troughs to occur early. And therefore, in my opinion, the position for the 40-week cycle trough, which is over here at the end of October 2020, is indeed the correct one. And so I think that is a very good position for the 40-week cycle trough. So my level of confidence in this analysis is also definitely at the 40-week cycle level. Now let's take a look at the 20-week cycle. The 20-week cycle averages 136 days. 136 days from our 40-week cycle trough at the end of October would be over here in about the middle of March of this year. That's 136 days. And so the position of the 20-week cycle trough over here, as it has been phased in this analysis at the beginning of March, is an excellent one in my opinion. It was about 10 days early, not very early, but again, we have a bullish market, and so I would be inclined to expect the 20-week cycle trough to still occur slightly early. That's very much a rule of thumb. Other possible positions for the 20-week cycle trough include over here in early February, I think, and over here later in March. But my level of confidence in this analysis is certainly also at the 20-week cycle level. So the point about establishing my confidence in this cycle analysis is this. We are trying to answer the question of whether it is possible that the 18-month cycle trough has already occurred. Has it taken us by surprise? And having established my level of confidence, I can measure from that trough. Let's do it first of all with the 40-week cycle trough. So from the 40-week cycle trough, I would expect the next 40-week cycle trough to occur 272 days later. In other words, I would expect it to occur only here on about the 30th or 29th of July. Based on the fact that I am also confident in the position of the 20-week cycle trough, I can measure forward 136 days and say that I'm only expecting the next 20-week cycle trough, and because of the principle of synchronicity, also the 40-week and the 18-month cycle troughs to occur here on the 20th of July. So now, to get back to the original question, is it possible that the 18-month cycle trough has already occurred? Perhaps it occurred here in the middle of May. Well, that would result in a 20-week cycle, and remember that I am confident in the recent position of the 20-week cycle trough. That would result in a 20-week cycle of only 69 days. That, in my opinion, is absolutely out of the question, and therefore, because of my confidence at the 20-week cycle level, I can rule out the possibility that the 18-month cycle trough has formed. Let's extend our confidence in this analysis even further if we can, measuring from the most recent 20-week cycle trough. The average length of an 80-day cycle is 68 days. Do you notice that this trough occurred at 70 days after the most recent 20-week cycle trough, which makes that an excellent candidate for the 80-day cycle trough? And I can say with some confidence that the 80-day cycle trough has been correctly positioned. Therefore, my confidence in this analysis goes down to the 80-day cycle level. Again, measuring forward from that 80-day cycle trough, I can say that I expect the next 80-day cycle trough to occur after another 68 days have elapsed, allowing for the principle of variation, which tells us that each one of these waves of each and every cycle will vary in wavelength. And I can say that I expect the next 80-day cycle trough to occur on the 20th of July. And so because of my level of confidence in this analysis being at the 80-day cycle level, I can say with a good deal of confidence that the 18-month cycle trough has not yet occurred. Now let's turn our attention to what we are expecting to happen as price moves down into this 18-month cycle trough. And the first thing we're going to look at is an FLD of the 20-day cycle. The FLD is a very simple tool that Hurst discovered, or developed perhaps, and it is simply the median price of the price action displaced some distance into the future. That distance is calculated on the basis of the analysis that has been performed. I observed many years ago the fact that price interacts in a fairly regular manner with each FLD. By each FLD, I mean with the FLD of each and every cycle. And the way in which it tends to interact is starting with the trough, which is of at least 3 cycles longer than the cycle upon which the FLD is based. And so here the FLD is based on the 20-day cycle. So starting from a trough of the 80-day cycle, which is this trough over here, we will tend to observe an interaction where price crosses above the FLD. We label that interaction an A category interaction. and a target is generated on the basis of price crossing that FLD. In this case, that target was at a level of 42.45, so just about over there. We would usually expect that target to be achieved before the 20-day cycle trough forms in the market, because at the 20-day cycle trough there is another interaction between price and the FLD, which we label the B category interaction, where price comes down and finds support at the level of the FLD. It finds approximate support, as I've mentioned in several previous market update videos, not exact support, although sometimes it is remarkably exact, but it will generally come down and find support at about the level of the 20-day FLD before bouncing away from the FLD in a C category interaction. Then as price comes down into the 40-day cycle trough, it will cross down below the 20-day FLD again and generate a target for the price level at which the 40-day cycle trough is expected to form. In this case, that target was at a level of 41.76. That's about over there, and you can see the price came down and fulfilled that target, moved a little below it, and in overnight price action on Sunday night, I'm recording this video on Monday morning before the markets open in the United States, you can see the price has already bounced up and potentially is leaving a 40-day cycle trough in its wake. So what are we expecting next in terms of the 20-day FLD? Our next interaction, this was a D category interaction, our next one would be an E category interaction where price crosses back above the 20-day FLD, and then of course it will form another peak, and then it will move down and cross below in an F category interaction and start its move down into the 18-month cycle trough. There are a few things to observe here. Perhaps the most important thing to point out is that price has started failing to reach its upside targets, particularly in terms of the 42.45 target, which it should have reached over here before the B category interaction. It only just slightly missed reaching that target, and then of course it did achieve it, and it went even higher to form this peak over here. The other thing to notice is that it overshot the target to the downside, and so we are beginning to see a little bit of bearishness. Not very much, but we're beginning to see some bearishness come into this market. Now I would like to spend a few minutes just speaking about another FLD, because just as we are able to track interaction between price and the 20-day FLD, we can do the same with each and every FLD, and I would like to take a look at the 40-day FLD because I believe it provides us with some other useful information. The interactions between price and the 40-day FLD start at a 20-week cycle trough, which we saw in early March of this year. And so there is the 20-week cycle trough. Here is our first interaction with the FLD, which is of course labeled an A category interaction. That generated a target of 39.75, and that target was very accurately achieved over here, which is what we would expect. I have already mentioned that that A category target should really be achieved before price comes back down and finds support at the level of the FLD as it forms the 40-day cycle trough. Now the position of the 40-day cycle trough in this analysis is very questionable. I think Cent Trader has positioned it over there. You can see that we had several weeks of pretty much straight upwards price movement, and so positioning that 40-day cycle trough within that constant upwards movement is a difficult thing to do, and there are some analysts that might argue that the 40-day cycle trough should be positioned over there. Nevertheless, in terms of the interaction between the FLD and price, the 40-day cycle trough is usually expected to form at around about the time the price finds support at the level of the 40-day FLD, which I think you can see if I clear some of these markings. I think you can see that is in fact exactly what happened. Over here is the price pretty much found support at the level of the FLD, tracked along the FLD for several days and then moved upwards. So that was our B category and C category interaction. Our next interaction is a D category interaction as price comes down to the 80-day cycle trough. Here is the 80-day cycle trough in the middle of May, and here is our D category interaction as price crossed down below it. That interaction generated a target of 40.93. and you can see that that target was achieved and it was overshot to the downside, indicating perhaps a little bit of bearishness creeping into this market as price came down into the 80-day cycle trough. The next interaction was a slightly complex one where price came up, touched the FLD, but then broke up above it over here, and that is our E category interaction, which generated a target of 4337, a target that was not achieved as price came up and formed this peak over here. The fact that that target has not been achieved is another subtle indication of the beginnings of some bearishness in this market. Price then crossed down below the 40-day FLD in an F category interaction and generated a target of 4146. Let's actually zoom in and take a closer look at that, because I think you will see how sometimes these targets can be pretty extraordinarily accurate. So we had a target of 4146, which, if I've got the scaling correct, is over there. That was the target for the F category interaction. Now, what are we expecting next? And here is the interesting thing, and the point where our consideration of the interactions with the 20-day and the 40-day FLDs differ slightly, because the next interaction is, of course, a G category interaction, where price is expected to come up and find resistance at the level of the FLD. And so this 40-day cycle FLD is going to be a very useful line to watch, because it is where we are expecting price to find some resistance before turning down and moving into the 18-month cycle trough, or I should say the next 20-week cycle trough, which by the principle of synchronicity will also be a trough of the 40-week cycle and the 18-month cycle. So that is what I am expecting. It looks as if the price has started its move down into the 18-month cycle trough. We will be watching with great interest as it continues to interact with all of the cycle FLDs and tracking the progress of its move into the 18-month cycle trough. I do hope that you found this market update interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.